Good morning and thanks so much for tuning into the trade setup. I'm Neeraj Shah. A quick check at the global news flow before we get in a guest to try and assess what's looking like globally. So the US 10-year yield rose to the highest level since October 2022. Circa 4.25 to 4.30 is the range since the last 24 hours. Bitcoin abruptly tumbled as much as 9% to just over $26,000 late Thursday. Evergrande Group sought Chapter 15 bankruptcy protection in New York on Thursday. Effectively, they ring fence what is in the US while they try to settle everything else outside. Oil rose as dollar eased and China seeks to soothe economic woes. And keep in mind that this is after falling for multiple days. It's about $1 kind of an uptick to maybe yesterday's price. And even that is a very fast moving thing. So don't think of oil having risen sharply. Currently, the mood is somber across the world on multiple counts. And I thought it was important to get in a perspective about what this could mean for global growth and growth assets, risk assets, equities in particular. And is India slightly different even in such a scenario? Arvind Sanger, who looks at a lot of these things very, very closely, Johnson right now to give us his sense and his advice. Arvind, great having you. Thanks so much for taking the time out. Good evening to you. What have you made of the recent spate of news flow, a lot of which is seemingly worrying from a growth perspective?
Uh, Neeraj, these are real concerns because I do believe that these global challenges are going to create headwinds for all markets. What we are seeing is, interest rates in the U.S. are rising. China's economic issues are getting worse. So if you look at the two largest, economies in the world, they're going in opposite directions. U.S. economy is too hot, and therefore interest rates are rising because the expectation is Fed is either going to keep rates higher longer, or Fed might even have to raise rates. So that's the concern on the U.S. side. On the China side, the economy is looking very weak, and there's a lot of problems in the real estate sector. There's problems in the shadow banking system. There's general malaise and weak demand. And Europe, which is a third pillar of global economic engines, if I may call it that, is also seeing inflation and central bankers raising rates. So I don't think the global picture is looking particularly hardy right now, which is why the market is taking a bit of a correction right now.
This Evergrande filing for this bankruptcy protection, is it a big deal, or is this ring fencing US individually, and therefore we know that there is an issue with Chinese developers, but this particular piece of news, is this a very big deal, or kind of par for the course?
I think this is kind of old hat. At the end of the day, Evergrande has been under all kinds of problems and gradually defaulting. So I don't think Evergrande by itself is the real story. But the spreading of the problem to other developers, and then more importantly, spreading to some of the what are called trust products in China, which are part of the shadow banking system. That's the new problem. And so the problem keeps spreading. And Evergrande is, in some ways, yesterday's story, although obviously the news story was that it filed in the US for bankruptcy protection. But I think that was kind of almost a given. I think the problem is that it goes way beyond Evergrande, and there doesn't seem to be any confidence on, what the Chinese government is going to do. Eventually, they're going to have to step in with something meaningful. But so far, we have not seen meaningful action from the Chinese government.
Yeah, they're resisting stimulus even as they're trying to do everything with the yuan. So that's interesting. Arvind, in such a scenario, with however closely you're looking at India, I presume. I mean, I know you've been looking India very closely for a long time now, but purely from let's say renewed interest, because so many people are talking about Indian markets currently, and they've been bucking the trend, so to say. Do you reckon that may continue despite Chinese issues, or does a China domino impact India as much as some of the other markets?
No, I don't think the China problems are a big negative for India, because India is not a big exporter to China. So China is not that important. In fact, China's problem has been India's gain. And if you look at, late last year and early this year, when China reopening was all the craze, at that time, the Indian market did poorly and the Chinese market did well. So in that sense, I don't think the China problems by themselves are as big a problem for India. But inflation in India is surprised on the upside. The RBI has had to, scale back on its expectations of, how quickly they might be able to ease, or the economists have had to scale back the expectations of how quickly RBI can act. And if the Fed and other central bankers keep having to raise rates, that does put some, potential pressure on the rupee or on the RBI, especially if Indian inflation also remains elevated. Although I would hope that some of the vegetable inflation is more temporary and will go away. So, I think I would worry more about US and Europe interest rate policy affecting global liquidity, affecting the Indian market, than I was about Chinese economic problems affecting Indian market.
Awesome. And therefore, before we wrap up, this uptick in yields that we're seeing, a lot of people are saying this is not natural. It could well have to do with the incessant selling of treasury that China might be doing, and therefore don't see this, or maybe see this as a transient issue as opposed to a real issue. Your thoughts on the yield uptick in the US?
Well, clearly the magnitude of the move in the 10 years, when nothing really has happened, does suggest that there might be multiple factors at play, and it may not just be that suddenly people start getting concerned about the long-dated, inflation expectation and long-dated interest rates. So it does seem to be other factors at work, and I've seen seen the suggestion that it might be partly China and others selling long-dated U.S. Treasuries. So that could be part of the culprit. But I think part of it that we have to watch is what is going on with the U.S. growth rates and the U.S. inflation, and if that remains a problem. So I would not panic purely on the 10-year yield moving up, but I would look at some of the other data to see, is inflation coming under control? Because if it is, then Fed can look less hawkish, and that would help the overall interest rates, including the 10-year.
Yeah, one would be hoping for the pivot from what the minute showed, for sure. Arvind Sanger, really appreciate you taking the time out and giving us how you think about the 2 or 3 key issues that we're looking at the markets this morning. Much appreciate. Thanks for taking the time.
Thank you.
All right, viewers. So that's the view from Arvind Sanger. Like we said here, that the Evergrande issue is not necessarily as big, and what could actually be impacting is what's happening on the yields, and that is to be kept in mind. For this very reason, at 10 a.m. today, you will hear out from Jonathan Garner of Morgan Stanley, whose recent note suggested that India is amongst the favorite markets, and he turned constructive after a really long time. The question is, do the issues that have come to the fore after the note came out alter the view in any fashion? Not in terms of India not becoming a favorite or not remaining a favorite, but could there be near-term gyrations to risk assets per se? It's an important conversation. You might want to tune in for that. What's the trade setup therefore for the day looking like? Well, the Chinese concerns might have a bearing on sentiment in the very short term. If anything, they might keep the reversion of global optimism in check. August FI outflows of over 10,000 crore rupees caps any upward move, despite the fact that I still repeat what I said yesterday, that I don't think this is a market for going large leverage short. You might get caught on the wrong foot at a very long time. A lot of indicators suggesting that. So please be careful is all I'm saying. If you can trade the index well, by all means go ahead. Not too many people can do that. I certainly can't predict the index. I'm just saying what the indicators seem to be suggesting. The Nifty PSU bank ended in the green territory, holding up the Nifty better, holding up the bank Nifty better, I mean, and it remains the key favorite bottom-up pocket of some investors, if not all. So keep an eye out for that bucket for sure. A clutch of stocks had some very interesting price volume movements in trade yesterday. Global Spirits, we all know, was down because of a bulk deal, and therefore the volumes would be higher. But some of the others, eMudra, 16% higher, 5 times 2-week average. Cochin Shipyard, secondary on a trot and on very high volumes as well, which suggests that there is some bit of delivery-based buying that's happening there, because the interest is very, very high there. And JK Paper had a strong move yesterday, 4 times 2-week average volumes, with the stock being up 5.4%. Flows, well, FI sold about 1510 crores yesterday. And like I said on the trade setup piece as well, over 10,000 crores sold in the month of August thus far. What therefore about stocks to watch? Well, not a very long list, obviously. So NTPC has inked a business transfer agreement to sell its coal mining business to unit NTPC Mining, transfer all 6 coal mines to NTPC Mining. Does this mean that they're looking for an upgraded ESG score, NTPC? Well, let's wait and watch. Adani Green Energy had multiple announcements. The one that stood out for me amongst others was that the associate company Mundra Solar Energy has received approval for its solar photovoltaic manufacturing plant in Mundra from the Solar Energy Corporation of India. The plant has capacity of 2 gigs per annum. Watch out for this. There's a newspaper report about a Middle Eastern firm looking to take a large chunk of one of the units of Adani Green as well. So it could be interesting what happens there. We do not have independent confirmation of the same, of course. So just like to lay that disclaimer. Also the disclaimer that the Adani Media Networks currently owns 49% and has entered into an MOU to acquire the remaining 51% from QBML as well. Just a standard disclaimer. LTI Mindtree is the other one, which another IT company, I mean, which has gotten an order, is selected by AFLAC as the digital transformation partner for application modernization and cloud transformation. It will re-architect AFLAC's on-prem applications that are currently deployed on an out-of-support platform. So we don't know the size of this deal, but well, interesting one. In amidst all this news flow of delayed decision making by clients, what Infosys got, what LTI Mindtree has gotten, what HCL Tech got in Australia with Cricket Australia, all of those supposedly shots in the arm. GMBC has upwardly revised the dividend for FY23 to 11.45 per share versus 9.1 recommended earlier on May 30th. This was anticipated that there will be an upward revision. The stock was already factoring some bit of that in, but who knows, there might be a bit of a reaction. There's some news flow around FTSE changes having been done, and AI engineering KPIT added to an all cap index from all cap to an all world index. I do not have confirmation, but just laying it out, stocks like AI engineering, KPIT, Syngene, RVNL, if they are active, maybe this could be one of the reasons. Very quickly, a couple of queries that have come in. Well, views on ACC and Ayurveda industry. Well, disparate, and I can't give a view on a stock per se, but brokerages were very constructive, Abhishek, on some of these stocks. Okay, it's not ACC. Okay, Abhishek is asking, what are your views on the Ayurveda industry and the AAC blocks in the construction sector? Abhishek, sorry, not too well informed about this. Would be futile to try and second guess and give a wrong opinion. Not that I can give one. Maybe I'll try and ask some of the guests who come on air about some of these stocks, some of these things. So let's wait and watch. There's a query about whether one should sell large cap banks on fear of rate hikes. Well, actually, Arav, the premise is that if there are rate cuts at some point of time, they might result in NIM compression for banks. But if anything, I was reading a Nomura note this morning which said that the NIM compression is now getting factored into for the large cap banks. And they say that if anything, it might now impact some of the PSUs. I think that was the call. Very quickly before we wrap up, maybe I'll just mention what Nomura is saying. Just give me a second. Yep, their analysis seems to suggest that the deposit costs will likely peak out by third quarter of FY24 because their analysis of the rates and the maturity patterns of term deposits of the Indian banks indicate that they should see funding costs peak out by third quarter and would imply further 50 to 25 bips compression in quarterly NIMs, which is largely built into their estimates, and hence the risks to FY24 earnings arising out of NIM pressures are low, apart from those two, SBI and BOB, which have seen a sharp NIM decline in Q1 itself. So, well, they are not too perturbed about it. Maybe that helps. Well, that's the long and short of the trade setup today. Like I said, a clutch of important conversations, and none more so to my mind than Jonathan Garner, considering what's happening around the world. So watch out for this. Do try and tune in for this. It'll give us a great insight into what could be a global viewpoint. Rupee conversation with Abhishek Goenka of IFI Global at 8:30. Mahesh Babu of Switch Mobility at 2 p.m. and Stocks in Focus with Amrish Paliga, and Stocks to Watch with Nagaraj Shetty later on in the day. There's also Keynes Technology, which talks to us at somewhere around 12:30. So that's something to tune in for as well. Thanks so much for tuning into the Trade Setup. Have a great day ahead.